Now, I want to move on to the big news development in the NBFC space, which was the Reserve Bank of India lifting restrictions placed on IIFL Finance's gold loan business. Remember, these restrictions were imposed by the RBI early March. These restrictions prevented the company from sanctioning, disbursing gold loans. I caught up with Nirmal Jain, founder and chairman of the IIFL Group, to talk about what the lifting of this ban means. Have they started disbursement? And by when can we expect the gold loan book to go back to the pre-ban levels? Let's play this out.
So disbursement has just begun. Actually, it's just about 2-3 days. So maybe I'll say it's just since yesterday that we started our business. So it's been a long gap, and it'll take some time to ramp up. And it's very difficult to give any forecast or any projections on how quickly it will take. But what we are doing is, we are in no hurry or there's no panic to get back. We want to do it in a more steady, orderly manner, and making sure that the compliance is fully met, the risk controls are in place, and it's a long-term business, and I think we'll scale up over a period of time. Just because there's no precedence to this kind of disruption and resumption of the business, so it's very difficult to give any timeline or how quickly it will be. But I think practically it has started yesterday, and the response has been very good. Customers are coming back, and there are some branches where there have been queues also. So I think customers trust us, and we hope that things will recover faster.
If I can ask you, what was the amount disbursed first couple of days? What can?
It's very difficult. It's not very significant. Let me put it this way.
Got it. How easy or difficult is it going to be? Because you've lost market share because you were out of the market. Customers would have switched lenders, etc. as well. So what would you have to do to go out there and regain the share that you lost?
Gold loan is a very short-term product, so it gets repaid fast, and that's why almost 60% of book ran down. But the converse is also true, because it also builds up very fast. So typically our disbursements have been almost twice the AUM, and the customers will come back to us for the same reason that they chose us in the first place before the ban. Obviously, they liked our product and services superior to the competition. And I think we remain focused on the customer. We aren't really very concerned about how the book will ramp up, because the short-term product rotates much faster, and our people have been in touch. So, one fortunately good thing with hindsight is that we kept our people. There have been no salary cuts, no sort of deviation of job responsibilities. So they've been servicing the customer, they've been in touch with the customers. And so the trust of customers and employees is paramount to our culture, our ethos, and that is what should help us getting back our business. Whatever feedback I'm getting from customers, employees, people on the ground, there's a positive momentum. Customers basically like us, and at the earliest opportunity, they'll shift their business back to us.
That's heartening to hear. Mr. Jain, that ban came into effect on the 4th of March, right? Now, I'm not asking for the near term, but just a bird's eye kind of view. How long do you think will it take for you to rebuild the gold loan portfolio to pre-ban levels? Again, you said it's not a T20 match, so you will do it properly. But is it going to take a year and a half, 2 years? What should investors expect?
So I wish I knew. So my guess would be as good as yours. But if you get, logically, as I was saying, that disbursements can be twice the AUM, then, maybe. So again, as I said, that these forward-looking statements have to be taken with a pinch of salt, because, people should do their own analysis. And as I said, my guess is very difficult to really figure out. But whatever feedback we get from our people at the branches, it can take 6 to 12 months. But our target, as I said in the beginning, is not that we are really rushed to make sure that how quickly we get it. But we want to make sure that long term we have trust with the customers, and we build this business on a much stronger customer centricity so that whenever our market share come is lasting and is long term.
No, that is very well put. So just to paraphrase that, and correct me if I'm wrong, given the feedback that you're getting and the fact that your teams were intact and there was no disruption in that sense, they were in touch with customers, and the feedback that you have, the gold loan portfolio can go back to the pre-ban levels in the next 6 to 12 months. Again, I'm not going to hold you to that, but that's a bird's eye kind of a view.
I think that's the correct way to put it. Yes.
Okay. Got that. Can higher gold prices also act as a bit of a tailwind? I mean, gold prices are significantly higher where they were in the month of March and where we are now.
That is good and also cause of concern because I know the gold at the end of the day is a commodity and factors have been favorable globally. But one should be cautious because gold is at record all-time high. And if there's a correction in gold loan, then with other things being equal, you see that the industry level loan assets basically decline. And there was a very, actually, if you remember 2013-14, it was a big blow to the industry when the gold prices suddenly fell by, I think, 25-30%. So I would be rather cautious. And that is why we would diversify rather than just be overly dependent on gold as a medium-term strategy because gold prices, they can rise so rapidly. I mean, at any point in time, I can't say when, because as of now, all analysts, all experts will tell you that gold is looking good with interest rate cut in the US and many other factors. But we have seen historically that things can change overnight. And I would be rather cautious by the fact that the gold prices are at a very high level.
I got it. You said you want to build out the other segments as well. I mean, actually, you had pulled back growth in the non-gold loan segments as well, as a means to conserve liquidity, etc. Now, with this coming back on, will that also should that also ease in a way?
So, we have three separate entities. Our listed entity is primarily into gold loan and business loans. And we have housing finance and microfinance subsidiary companies. So as far as housing finance, microfinance are concerned, they are independently managed and also funded separately. And I don't think there should be any challenge in getting the growth back in those businesses subject to industry conditions as such. Now in the NBFC, which is the listed entity where there's a gold loan, the ban on the gold loan, has another significant business, which is a business loan. And we basically focus on small businesses, MSME, as we know them. And in these MSMEs, we do both secured as well as unsecured loan. And typical loan size is less than 10 lakh rupees, or it can be up to 30 lakh rupees, but the average will be less than 10. This is a segment where we have a natural advantage because we have a network of branches. As a group, 4,500 branches. Gold loan alone has 2,700 branches. We have people on the ground. These branches are located in the clusters where these kind of MSME enterprises, typically retail shops, traders, these kind of businessmen, they're around the shops. Many of them have been our customers for gold loan. So we see this as a significant synergistic business to expand and diversify over longer term. And this business in terms of sheer target market is much, much larger. And there the growth can be a lot more sustainable. And it's really not vulnerable to gold prices.
Mr. Jain, I was reading a sort of analyst report, and it said that just to come back to gold loans for a bit, co-lending was a big driver for your profitability there. Spreads were 800 to 900 basis points before the ban came through. Is that going to be the main channel for conducting gold loans?
Co-lending will continue as an important strategy. I don't think there's a margin booster as such, but it preserves capital and also reduces the risk on the balance sheet. Because if you borrow, probably you might borrow a slightly lower rate. But I think co-lending has been our strategy as a long term, to make sure that the risk is mitigated. The leverage is much lower. As you can see, our leverage around 3 is very low for an NBFC like ours. And most banks that we've been talking to are very keen to restart the business at the earliest, restart the co-lending operations. And if you see last 6.5 months, we have returned almost about 11,000 crore rupees of bank money for co-lending, DA, and all these partnerships that we had. and almost about 12 lakh customers would have closed their accounts and repaid the money. Everything has happened very smoothly. So actually, this has been trial by fire that we have stood well, because for any lending institution, the real true asset test is if there's a run of the liabilities, can you really liquidate your assets and repay? And I'm really proud to say at the same time, it has been like the testimony of the system that we have, that we have repaid such a large amount of money, closed so many customers' account without a single issue of asset quality or any issue of any significance about a customer grievance or asset quality.
Absolutely. Mr. Jain, let's sort of round this up with a few projections. Again, you're coming out of a phase which is you described as unprecedented, so there is no playbook for this. But your AUM, overall AUM, was about 79,000 crores as at the end of last year, FY24. Can you tell us in FY25, what should we expect?
It's very difficult, Prashant. So
how much lower would it be? Sharply lower? Does it look a lot better now? Just some sense.
It's absolutely impossible to give forward-looking statement at this point in time. So maybe once we restart our business, couple of months, 2-3 months, then we understand the pace of growth. But I think, from a longer-term strategy point of view, India is a huge market. The growth is there. But what we learned is that we should make sure that the compliance, the risk is foolproof. The customer centricity and customer service is absolutely is impeccable. Then growth is derivative and will follow. But I just cannot give any forward-looking statement. As I said, that your guess is as good as mine. So there's no point in putting numbers to that.
I mean, your historical growth rate has been between 20 to 25%. So whatever happens in FY25, beyond that, 26 onwards, I mean, one should expect those kind of rates to come back.
Think,
looking at history.
I understand. So other like economy, everything remaining good, we should get back to our historical growth rate.
Okay. And margins as well? I mean, are there... what's the sense? There was a little bit of a dip.
Margins, yeah. So here also, we don't want to get into any price cutting or in a panic state to get the business back by, by being aggressive in pricing. So margins over a longer term will be maintained. In the short term, because suddenly our cost has remained where it was in terms of number of people and branches, and then the assets go down. Obviously, it will impact the margins, but I think on a steady state basis, we'll get back our margins.
Okay, so we'll get back to the margin level and also to a growth rate of 20 to 25%, perhaps by FY26, once the gold business gets back on track. And when does that happen? Well, 6 to 12 months is the time guidance that Mr. Jain has given to get back to the pre-RBI ban level in terms of the gold business. So that's IIFL Finance. Finally, a sigh of relief coming in from the regulator after 6 months.